Hey guys, so come along with me and Amy to the Good to Know Lunch and Learn. It was held by Good Realty. It's always nice meeting other realtors in the area and learning a little bit about how they go about their business and just getting to know one another. You never know how you can help one another or just learn from one another, so that's always nice. Here we were just kind of asking, I think me and Amy were talking here actually about an email and update at our brokerage that we both were just finding out about. And then we kind of got to know each other. The other professionals, real estate professionals around the table, started talking a bit more. And there was a bookkeeper there in attendance as well.
But like this week, Monday, I had to give it to somebody else because I had to go to town unexpectedly for my daughter, and it's like,
It adds to frustration, but you just got to keep going.
Spam.
Are you filming it now? Huh? Oh, yeah.
Mileage tracker, oh Lord.
I've never kept up with my mom.
I was doing that. Not you. That's all. I'm not that. It's all I want. I'm going to end up this business. Yes. Not like you. I think it does. That's right. They all do. It's like taxes. Right. So it's not necessarily evils to pay for. Yeah. So you work at home now?
I lived here for 20 years, raised the kids. They went to Baker High School, and they're 35 and 30 now. But finally drug my husband across the state line 7 years ago.
Oh, wow.
Yeah.
Well, how do you guys like it?
Oh, I love it. I've always loved it. That was always the goal.
Okay.
He just wouldn't budge.
Oh.
He still works, but his office is in Spanish Fort by the Eastern Shore Shopping Center.
Okay.
And so he does like to go to the office every day, but a lot of his jobs are down there.
Okay.
So, he'll go to the office first thing in the morning.
And you guys, they always, it's lunch and learn, and they always feed us good during those. And this time, the speaker catered some fusaclis to us, so.
Yes, fusaclis always does.
Yes. We have one, but it's way up in Foley, and I never
go that far.
Because I used to work on Schillinger, so we have that one right on Schillinger Road. And so, my kids grew up with it. They love it. Whenever my oldest one, Selena lives in Mobile, she lives in Midtown, but whenever my oldest one.
This is my first time presenting to realtors and stuff, so take it easy on me. This used to be a much longer presentation this weekend, and I've had to bring it down so that, you all don't get completely bored and run out of here too. So, but feel free to ask questions as we go along. So, all right. So this is my business right here. I am Nolan Overton. I'm the owner of Overton Small Business Services. I'm an enrolled agent, which is like a CPA, but we concentrate mainly on taxes. When it comes to taxes, I can do everything that a CPA can do except for auditing. So, that's my information right there. And I forgot to bring in the cards, but they're on the information pads right there. So, thank you all for having me, first of all.
Well, thank you for coming.
All right, so let's get started. So we're gonna first I'm gonna go a brief overview over the income tax itself, so that you understand that it all bills. So just kind of stick with me here. So, the income tax is a pay-as-you-go tax. So, when you are a W-2 employee, your income taxes are generally withheld from your paycheck and remitted to the IRS and the State Department of Revenue. After I'm sure you all know everybody succeeds the first paycheck. Say what the heck happened to my check? So when you consider self-employed, income taxes are still required to be remitted at least quarterly on net earnings. So that means when you make money from self-employment, they still want you to pay. It's still considered the pay-as-you-go tax, the income tax. When you're self-employed, you're supposed to deposit whatever you're withholding for estimated taxes to the IRS at least once a quarter. So those due dates are April 15th, June 15th, September 15th, and January 15th for quarter 1, 2, 3, 4.
I have a question about that because I don't do that. I've never done that. I've always done it at the end of the year.
Yeah.
So am I wrong? Am I not?
You probably pay a $500 penalty.
Really?
So,
Really? That's yeah.
so
If
first
somebody
of all,
else doing your taxes, you do your own.
Like somebody else does my taxes for me.
yeah, so it's based on your net earnings, so that's how much money you make versus minus your expenses, which is why the bookkeeping is important.
Okay, so there's a threshold to where this applies to you, where you have to pay quarterly. It's not just if you're don't work for yourself, you definitely
The
have to.
law is if you make money in a quarter, you should be paying us.
Okay.
Because if you get paid at a job, they would already take that money out because you're required. Again, required, not suggested, not, oh, it's something you might want to do. It's actually required.
Yeah, I think I have a hard time when, because I was looking at her one
I
time.
never even looked over my taxes.
I had another preparer, and I was like, no, I was like, what's this $500 for? And she said, well, that's your fee because you weren't paying throughout the year. And I was like, how would I pay through? I don't know how to.
Yeah,
you later told me.
Right.
So I have a question too. I set up a separate tax account, and so it's tied to my brokerage, so my brokerage is aware of it, and so if my commission check, it comes in, my broker obviously takes their portion, they put part of it in like the tax account for me, and then they give me whatever's left over.
Do they,
Same with Jane Shopshire,
Right.
but you still have to pay it. She
Do they
doesn't pay it
deposit?
for you.
It's deposited into like a separate account, and so that's why I was trying to like see, so then there would be record of it based on like,
what do they do with it?
It's just a tax.
they just hold it till the end of the year.
So they're making sure you're
so that I can pay
setting
it. Yeah, so that I can pay it at the end of
Because
the
a lot
year.
of folks will, the weird rules and thumbs are usually 15% side, 25% side, 40% side. And that's good that you are putting money aside. That's good that you are putting money aside to pay the taxes, but it does need to be deposited at least once a year. I mean, if you do it, technically you're not supposed to do it like once, but it's kind of one of those things where as long as you're paying it.
Yeah, I do mine annually, and I file an extension because I don't have my stuff together at all.
When you do it quarterly, I'm sure there's like a due date when you need to have it done by each quarter or something like that. I don't think you know that. Is there like an app or something?
It's
Oh,
Yeah, it's like on there.
in the box.
okay, thank
You
you.
have to set up in advance. You just can't arbitrarily send the IRS money.
I mean, well, you can. So, if there's multiple ways to do it. You can send it in through the form 1040ES, these little coupon booklets you can usually get if you want to mail it in, or you can set up your IRS account online and pay electronically through there, or you can just go to irs.gov and their payments part and just pay it.
So this is only for federal, not for state.
Yes, state. That state actually requires it. So, and we'll go over that a little bit more as we go on, but yeah. So,
Just throw me in jail. Like, I don't even know what I do.
you don't go to jail unless you like actively try not to pay it.
Okay, just later on.
So yeah, that's what we were talking about. Self-employed individuals permit income tax to investigate tax deposits. They'll require timely deposits of income tax by a self-employed. Just the same as any other business, because when you're self-employed, you're considered a business, so you're held to the same rules that businesses are. And again, since income tax is a pay-as-you-go tax, if you make money, they expect you to pay it. Again, that can be kind of a soft rule. As long as you put enough in there to not qualify for the penalty, which I'll go over a little bit later, you should be. And then self-employed individuals allowed to estimate their income tax in order, their income in order to figure the tax. Because, I'm sure you all know sometimes you're doing good, sometimes not so good. So that's why I hope it's good. So independent contractors, which is what you're all considered.
So yes, y'all, that is a little sneak peek into the tax networking / seminar that Amy and I attended this week. Just a little insight on what it looks like, and we're all at a round table listening and asking questions, and you can never know too much as a 1099er. I feel like, there's just so much about taxes that a lot of people don't know, so it's kind of just very educational for us. So yeah.
The taxes just for the year, we have to, like, those deadlines, I'm trying to figure out how those deadlines come into play, like if there's a quarter where we didn't make anything, or, where we turn in.
Right.
Yeah, we
There's
don't turn anything in.
there's lots of different ways to calculate it. Some folks will just do just a flat amount, and again, I can go a little further into this as we go on, but yeah, there's many different ways to figure out what you want to pay and
Yeah, I didn't make
how
anything.
much.
And I would like to know, like, what do you turn in to prove that, okay, I made this much or I didn't make? Like, is there a form that you use to? Because I'm clueless.
No.
Like,
No, there's no particular
so it's
form.
like,
You-
I
you're
say
basically-
I made
yeah.
15 grand this quarter.
Yeah.
And
I mean, again, you're a business, so they expect you to conduct yourself as a business, doing your bookkeeping, making sure you're keeping up with your incomes and your expenses, and then
Because my estimate really low, it doesn't matter because they're going to cut you at the end anyway. Once
Basically,
you got your,
well, do you itemize your expenses each quarter too? Or
You can.
just at the end of the year? Okay.
So then you get a refund at the end because you got all these expenses that you didn't itemize before and you paid them. Yeah.
Oh, you get refunded if you, okay.
yeah, it's just like if you withhold too much at work. or
Okay.
the extra, yeah, so yeah, you're not just getting the money, you're never going to get back if you pay too much. It works the same way.
But not on your expenses. You don't file your expenses until tax time.
Well, yeah.
Quarterly, you're just paying it. Just like if you were an employee and you look at your pay stub, you know who's like, why they take all my money. That.
Okay. Yeah, I just wanted to talk to my tax lady. instead of just putting all my receipts, all my receipts in a dang Ziploc. I'm so old. I don't even. I know there's apps where you can take a picture and do that. I don't know what they are. I don't do it. I literally have receipts stuffed in a Ziploc, and then I go down my bank account and itemize it.
I use it's an Italian pie export recipes, and I keep it in the drawer of my car. So if I'm going through like food receipt or something, I have them organized for different categories.
Right.
It's easy.
Okay, I like that idea as well.
Yeah, I just use a bank statement. I have on my receipts that they pay out. So I just use a bank statement to use one account for my expenses.
Right.
And then I'll do an Excel spreadsheet, and I go through and say, this is what this is, this is what this is, instead of making this. Because I feel like I know more of what I'm spending than they do.
Right, and that's kind of what I do. I go and I literally with a notebook. I'm like, this is the I do it all by hand. Now I'm showing my Avon.
Yeah. I love these QuickBooks Online. I don't know if that makes sense for you yet, but it's like so much easier than writing all by hand.
I'm very how do you say technology?
Technology.
Yes, that word.
Technology.
I can't. It's so hard for me to grasp things. And is AI coming out too? I've got to take classes. I got to go to that class at Lord just to learn.
When they say if you get audited and you don't have receipts, then they can like dock your money for it.
How much
receipts?
Yeah, that's
That's a good point. I wonder if you argue that, what would happen. I really do wonder how it would actually play out. That's just what I
I
want
went one for 1992. You can't read it.
This is our receipt.
Yeah,
I don't know.
Please let me know if you can read it because I forgot what it says.
For some reason, I feel like I wouldn't be able to get away with it. But
I don't want to go back to 1992.
No, but I have a receipt. You can't read it.
because some of those receipts fade right
Yeah, they
away.
do.
Yeah.
Yeah, I like to scan mine in.
You know, if I say, well, I say, it was wise to scan, take pictures.
And then you just throw them away.
And then, yeah, you can, if you,
Oh,
you
what
know.
about shoebox?
I know. It can be temporary.
Where do you scan yours?
Yeah.
I have an app called Scanner Pro. That's what I use. I pay $5 for it, but there's free apps too. So, but I just use my phone camera and I
Yeah,
scan
that's
it.
right.
Scanner
I
Pro.
take pictures on my
Yeah.
phone and send it to my, send it to my drive.
I love it. It'll even post you a long receipt, and then I just upload it to a folder in my Google Drive, and then I just have them.
And then QuickBooks, you can attach it to it.
Yeah, you can. Then you don't have to. You don't need that.
Anyway,
Well, that's an extra fee for attaching every receipt, but yeah, you can do that.
I do that.
That's it.
I'm supposed to want to think about it. Okay. All right, independent contractor versus employees. We're still going over the. All right, independent contractor versus employees. All right, so independent contractor works with relative independence. The hiring company controls the result of the work, but not how and when the work is done. That's what makes you independent. If somebody's telling you where to be and how to do your job, you might actually be an employee and you might want to talk to the State Department of Labor, but that's a whole different presentation right there. Considered self-employed, contractors responsible for paying their own income tax and self-employment tax, which we'll get into that. Also responsible for covering their own expenses, again, because you're considered a business, so those expenses can be deductible. You receive a 1099 NC, report your annual earnings. The employee works under their direct control of the employer with regards to work tax schedules and procedures. Employer withholds employees' income tax and pays a portion of the Social Security and Medicare tax, also known as the FICA tax. Periodically remits these withholdings to the appropriate agency. Again, that's the pay-as-you-go tax. They have to send it in at least quarterly, just like self-employed person does. Who knows what the self-employment tax is? Like what it covers? Anybody? No. So self-employment tax and FICA tax are actually the same thing. That's how a self-employed person pays into Social Security and Medicare. So all the businesses, I won't say any industries out loud, hair salons, that hide all their cash income is losing out because they're not paying into Social Security. So all that cash they're stuffing under their beds, I hope they're putting it away for retirement because they're not going to be able to get Social Security.
With us filing a 1099, when we become that retirement age, we can get retirement.
Yeah, if you pay into the tax, yeah.
And you
Okay,
can check to see on the Social Security app. You can get on your phone and it'll show you how much you'll be drawing each month when you retire at different ages based on what you pay.
that's good to know because I didn't think I would have anything being self-employed.
Yeah, so that's what it is there. So one kind of income is you actually pay into stuff. The employer typically provides tools and resources and benefits. You receive a W-2 report your annual wages and your tax withholding. Okay, so I'm sure you're all familiar with forms. These are forms that your employer will get you to fill out. Use them when you start. You W-9. You put, probably sole proprietorship, possibly LLC, or even S corp. And then 1099 NC is what you receive at the end of the year. The employee information there, your information there. Compensation right there, and if for some reason they hold something, it would show up in this box right here, so information right there that is or isn't sometimes filled out. But there you go. All right, so how does independent contractors are taxed? All right, self-employed individuals are taxed on their net income. So what is net income? Gross revenue minus expenses. That's what you're taxed on. So you're not taxed on everything that you make. You're taxed on everything that you make minus whatever your business expenses are, which is why you should keep up your business expenses. Because if you don't, you are taxed on everything that you make. So again, good to have some bookkeeping now down there.
I got a question.
Mhm.
How much does bookkeeping cost? Because I'm really
And it depends on the bookkeeping. I mean, most realtors I know, you don't really require, anything like super fancy or any kind of like big software. Anything you can usually do it like on a spreadsheet. Just the trick is, I would say, is to keep up with it over the year. Don't wait till the end of the year to do it because
Like I've been
that's
doing.
what happens to everybody. You get a stack of
So
stuff
quarterly,
that-
if I was to bring you my Ziploc full of receipts and printed off bank statements,
Uh-huh.
you would be able to do what I needed? Or how would you suggest someone do that if they're needing to do their bookkeeping?
I mean, basically, if you're working with a bookkeeper, then yeah, most of us would handle that. I used to charge more for Ziploc Bank, but
Yeah, because it's so much better to use the software. Like I would just make. I would only work with you if you're willing to do QuickBooks Online, but it's not that expensive.
Would you be willing to educate someone how to do that? Because,
That's an idea.
okay, that's a good idea.
Yeah.
Because we really need that.
yeah. Like I said, just like some spreadsheet even. you know, somewhere that you add up whatever your income is, and somewhere, the most important part, again, keeping up with your expenses. You know.
This is my spreadsheet. This has been my spreadsheet. And I'll put the, you know, this is marketing.
I'll just do Excel.
You put it in Excel sheet, it does make it really-
I went to college to graduate, and I have a degree, and I do not know how I passed
I
that.
didn't teach us that. I had to go back later.
Like, I don't even know how I passed that.
Okay, so your self-employment tax is 15.3% of your net income. So that's first tax you have to pay as a self-employed person. You're paying self-employment tax, which again is the FICA tax, same as if you were working for somebody else. The only difference is when you work for somebody else, your employer and you both pay it. You each pay half. When you're self-employed, you pay the whole thing. So it's 15.3%, but you get to the half of it just like if you were working for a business. But you are a business, so you also get to the that. Getting back to that. Okay, so your income tax from self-employment is your net income times also your income tax. So when the way you're on tax, you pay self-employment tax on your net income, and then your net income goes over to your 1040 and is added to your total income. This is might lose some of you, I know. Goes over there, and then you pay whatever your total income tax rate is.
How would you know your income tax rate? Is that the self-employment tax? Or
No, self-employment tax is going to be the separate thing. You find that part out first, because you got to do your.
So self-employment tax is the same as FICA?
Yes.
And I can pay quarterly too?
It's figured really when you do your income taxes.
And that's
But you should figure this out to figure out. It's one of the ways you can decide what to withhold, what to pay in. Basically, the simplest equation is, well, here, just go to the next part here. So, total tax from self-employment is your self-employment tax plus your income tax from self-employment. This is like the simplest way to come up with what you might want to put in there. Take whatever you made, multiply by 15.3%. I did put a rate here because your income tax rate varies depending on, you know, what you got going on. You might be in the 20% tax bracket, top tax bracket. You might be, you know, higher or lower depending on what you got going on. Plus there's, you know, there's all kinds of deductions and credits and everything that goes into your personal income tax. So that one usually takes more of a, usually I analyze that one a little deeper. But generally, if you take whatever your top margin rate is, multiply that to get your income tax and self-employment, and then net income times self-employment tax, add all that up, I'll give you an idea of what you might want to do for estimated taxes. I'm trying to make this complicated, but sometimes it's just no way around it. So if your total tax from self-employment or otherwise, not just self-employment, is more than $1,000, you may be subject to penalties due to failure to pay or underpayment of estimated tax.
Woo.
Yeah. So
when you say that though, like say I estimate that I'm going to owe $5,000 in taxes.
Okay.
And so I divide it up by the 4 and I pay it in quarterly. And then I have a better year than I anticipate.
Yeah.
Am I going to get dinged?
if your total tax by the time you finish the 1040 ends up being more than $5,000, yeah.
So, but if I'm really close, is it going to be, to me that sounds like if I go, I'm going to pay $500 at work, knowing that ain't even close to what I'm going to owe, that's kind
No,
of.
yeah, you're right. I mean, if you calculate you owe 5,000, but you're only putting up 500, then
You're
obviously,
getting
yeah.
But if you really didn't know, say if you thought you were going to pay $5,000 and it was $5,050, would I be penalized?
No.
But that's pretty close. I mean, that's like you're good.
Yeah, if you thought it was going to be 5,000, but it ended up being 7,500, then yeah, there could be a penalty involved. So there's.
Could I make an additional payment throughout, in addition to the quarterly, to avoid any penalties? If I see that done well, like if I have a big $1 million sale, but it's by myself, so I get my state paycheck. Could I make that payment then to avoid penalties?
You could, yeah.
Okay.
Like I said, this is why I recommend not waiting until the end of the year to find this stuff out. Because, you know, the end of the year happens to come right after Christmas. And a lot of folks think they might have, I had a client that happened to last year. He went from making about $17,000 one year to $1 million.
Ooh.
And most of that, a lot of that came in October through the end of the year. Just out of nowhere, just bam, he just exploded.
Oh my God.
And so we met.
We're next, baby.
we met last December, and I told him, hey, we need to make a huge estimated tax deposit because you're going to owe this tax. Well, this is one of those folks that likes to listen to TikTok too much and thought that, well, he found a way where he could live tax-free and he's not going to have to pay any taxes.
What? Then what country is he living
It's a
in?
whole the country of holy. But yeah, so I ended up telling him, hey, you know, I calculated this back in our road math. It's like you're going to end up owing about $140,000 in taxes if we don't deposit some of the stuff in, plus the penalties on top of it too. No, it's fine. You know, we can do it. Okay, and then sure enough, went to go do his taxes. Taxes came up to like $138,000 and some change. So I was pretty close. So.
But at the end of the year, like when you do your final, if you were short on any of the, you can make it up at that point without penalties.
Yeah, as long as you don't end up with the $1,000, you're fine. And $500 for the state.
So if you was, see that makes sense because if you're making it up, it shouldn't matter if you were short. Why not just do it all at the end of the year and pay that $500? So you're not.
So you can.
Okay.
But you get penalized if you do that and you're short. And if you end up doing that and you're still short, they actually penalize you for every quarter that you didn't pay that you're supposed to. Because again, it's pay as you go and you expect you to pay every quarter. So it's kind of one of those things, as long as you don't end up getting caught, you're fine. But if you do, they're going to slap your hand for every quarter that you didn't do that. So, but as long as you're putting enough in there. But the reason I say from self-employment or otherwise is because it could be a reason outside of self-employment too. You might have a stock in something that skyrocketed and you didn't really think about it until that 1099 comes in. And you got all this investment income that you didn't plan for. You planned for your self-employment stuff, but you didn't plan for that. This is what happens a lot.
Yeah, probably like if you're filing jointly with your spouse.
Yeah.
Yeah. I think that's what you're probably getting those.
A lot of times, you know, as long as the spouse is, assuming they have like a normal job or whatever, and they're withholding enough to cover whatever their income is. But there's all kinds of reasons why it might go up, not just from self-employed, but the penalty applies even if you're not self-employed at all and you still owe over $1,000, you're still subject to that penalty right there. Now there is kind of a get out of jail free card the first time, where you can basically tell the IRS, hey, I didn't know this was going to happen and it won't happen again. And the IRS will go, okay. And for like 1 year, you can slide by, but not after that. So yeah, fun stuff.
So is the only way you get caught is if they audit you?
No, when you eventually file your taxes.
Then you get.
Yeah.
So you've not been paying a penalty all these years and you never know.
Yeah, so
Most
late.
folks do. I'll take the tax return and show them, what was it, 2260?
I guess I love seeing
There's
them filing in
a,
here.
there should be a form in there that shows you. It's like, hey, so
I don't have
it's what should be every
pictures.
quarter, and penalize for every quarter that you didn't pay.
Okay, I'll definitely have to get back and look now. Like, is there a certain page it's on?
It's a form, I want to say 2262, there's so many form numbers, but it's 20, it's not, I mean, I'll look it up.
Okay.
But there's a form in fact, I've had folks that, sometimes the preparer doesn't put that form in the copy that you get, but it'll show up on your, should be page 2 of your 1040, and, or schedule 2. Your schedule 2 or page 2, it's in there somewhere that you can find it, because I have folks tell me all the time that, well, I've never paid that, and then I go to the tax return and show
Yeah,
them.
okay.
So,
Yeah, we learned something for sure.
so, yeah, alright, so, get into,
We should
case
definitely
fixes.
have these classes, like when realtors are learning.
Starting out.
Yeah.
You may do something than your pre-license.
Yeah.
Teach you a little something.
Yeah. Look, now there's what you can do, go into these real estate schools and teach a little class. That's a good idea.
I'm just gonna let that
Hey, they might work something out.
Okay, so again, self-employed contractors, you're all considered businesses, so you are allowed to write off your business expenses. Business expenses are defined as ordinary and necessary costs of running a business. That's the IRS definition of a business expense. What's ordinary and necessary can vary wildly between industries. You guys probably can't buy a video game and write that thing off, but let's say somebody was a Twitch streamer and they had to play a new game to get folks to watch it. Well, it's right off for them because that would be an ordinary and necessary expense. So, but that's really what you're considering when you're asking the question, can I write this off? That's
Are you using it for business to run? The necessary for your business to
Yeah.
operate.
And then if you get really into it, it can get some gray areas that I constantly talk to folks about. It's like, hey, does this jet ski count? No, it usually does not. Again, actual client, electrical company, bought a jet ski. If I wrap it in the company name, I can write it off, right?
Props to you if you've stayed throughout that whole like 30-minute presentation that I recorded. But that was just the first half. He was so knowledgeable and so great. It was truly like it was an open book and we were reading every single page. We stayed there like 30 minutes over time talking and asking questions, and he answered beautifully. It was great. So yeah, I hope you got something out of this video. I hope the knowledge helped, especially if you listened to the things that were said. And then we took a few flicks, of course, we had to. So, the end.